So economic data came out today showing a pretty resilient economy, still buoyed by the Trump tax reductions and the regulatory cuts. Stocks, though, they still remain on edge, moving dramatically depending on the latest presidential Truth Social posting or an Iranian missile strike. Let's talk about it with Steve Forbes, Forbes Media chairman and editor-in-chief, and EJ Antoni, Heritage Foundation chief economist, who joins us by remote. EJ, we saw it this morning, even in the pre-market activity. The stocks were doing pretty well in pre-market, but they suddenly zoomed way up, jumped about 200 points on the Dow as a result of a Truth Social post, which just mentioned the word ceasefire. Once people read into that, it came back down again because they realized he wasn't announcing a ceasefire. So stocks are really edgy right now, aren't they?
Oh, absolutely, David. I mean, this market is an absolute beast, and you have that inverse relationship that has been very well established between equity prices and oil prices, some other commodities too, but chiefly oil, obviously. And unfortunately, it makes it very, very difficult to trade. And it's the kind of environment, I think, where retail traders, retail investors in particular, really just get absolutely slaughtered because they're constantly trying to follow the moves of the big movers, right? The institutional investors, they're the ones who are typically first out of the gate. And again, if you're trying to chase this market, it is constantly moving. And so by the time you catch it, it has moved directions. Yeah. And again, that's why I say that the little guy really, really tends to get hammered in these environments.
But Steve, one thing that's really moving right now is economic progress in the United States. I mean, we had 3 indices that came in. One was February. The retail sales number was good, but that was mostly for February, and that was before the war. But the ADP jobs report beat expectations. And then you had the manufacturing PMI index, the purchasing managers index. That was another beat. So the economy itself is responding to the supply side incentives that Trump has put into it.
Yeah, there's real strength in the economy, and that's why I hope the president signed his address, lays out to the American people what is at stake in Iran. I know he's done it countless times, talking to reporters or whatever, but a nationwide address gives an aura of authority so people can put these things in perspective. So gasoline prices go up, well, eventually they're going to come down. And the key thing is, once this war is over, eventually it will be, it's not just the price itself, it's the trend line. If it's coming down, people say, okay, this is working, this is getting back to normal, other things are going in the right direction. And so he's got to lay that out, and therefore I think the American people will cut him some slack on that. Yeah. You mentioned manufacturing. So all the economy needs is a Federal Reserve that's not crazy, that believes prosperity causes inflation. That's why, again, I hope the White House starts to push Kevin Warsh's hearings and get off of this thing of trying to prosecute Powell. Forget it. Incompetence is not a crime, or there'd be no one left in Washington.
Powell. Yeah. However, EJ, speaking of Jay Powell, it shocked the heck out of me to see the panicky Powell suddenly saying, well, an oil shock is easy to get over. You have to look through it. Yeah, he was talking at Harvard this week, and he actually said that the oil shock will be short-lived. Those are his words. So the Fed doesn't seem as of yet to be panicking about oil prices or something that's going to be. It looks like they got the message that in fact the world is still producing a lot more oil than it's using.
Right, David. And again, it is amazing how when we look at the Fed and when we look at a political animal like Powell, that he is choosing this of all things to actually look back at history and learn from the mistakes of his predecessors, something that he didn't do in COVID. It's something that he didn't do when inflation was really ramping up in 21 and into 2022. But I guess, thank goodness for small favors, right? The fact that he is apparently not going to make the same mistake that previous Fed chairs did when we had oil shocks in the past and the Fed actually raised rates, thinking that the inflation they were facing was somehow a monetary phenomenon, when it was very clearly just the result of a higher input price in the economy of a key input. But I do want to say that is something that we're seeing in data. We saw it in the ISM manufacturing PMI that you were just talking about, where, yes, it was good to see the activity level pick up in the sector. It was good to see that beat on the headline number. But one of the things that was really disturbing was seeing the inflation inflation number, that part of the report, hit the highest level since June of 2022. That was the peak of inflation under Biden. So I think that gives you some perspective as to the higher input costs that we're currently seeing, at least in the manufacturing sector.
But Steve, you know what really worries me most? It's not Iran, it's not the inflation, the PMI report. It's the Democratic socialists who are still moving Democratic states, like the state of Washington, like California, New York, into this idea that the wealth tax that you have to, first of all, it's not true that the wealthy are not paying their fair share of taxes. They're paying most of these states are paying about 40% of the income tax revenue comes from the top 1% from the wealthy. And they're moving out. So these states are going to kill themselves. But if in fact, the Republicans lose the midterms, and if, in fact, the presidential elections go towards the Democrats, they're going to be pushing a wealth tax. We have to remind people that where the wealth tax has been tried in Europe, there's been about 12 nations that tried it out in Europe. We can put up the flag full screen. 9 of those 12 nations lost revenue as a result of it because the wealth just moved to other countries where they weren't taxed to death, and they didn't go into their homes and look at what valuables they had that could be considered wealthy. 9 out of 12 nations who tried it failed, and I suggest it be the same, if not more, with regard to the states that accept it now. If you start taxing wealth, that is unearned, your ungained income, the amount of money that you could be getting if you sold your stocks, but you haven't even sold the stocks yet, that would be a disaster for those states that pick it up.
Yeah, this is envy economics, and it's about trying to control the people. It would destroy the economy when you destroy capital, destroy savings and the like. They have this cartoonish attitude that wealth is piles of cash. You just go in and scoop it up. They don't realize most wealth is asset value.
That's right.
And if you have a hostile environment, the asset value goes down, so it becomes self-defeating, and then they say we need more, and they go after the middle class. That's their ultimate goal.
The opposite of a wealth tax is a flat tax, where you have one deduction that is the first $50,000 or whatever you make is tax-free, so that helps the poor and the lower middle class. Everything above that would be taxed at the same level, 15, 16, 17%, whatever it is, and it's fair, and you get rid of all the deductions. 10 seconds. Are we going to finally get a flat tax in this country?
I hope in 2028 a presidential candidate will make it at the center and fight off all the special interests who are going to lose out on a flat tax. And then by the way, it ends up not only creating more revenue, but more opportunity people, those who have the least benefit the most. And as you pointed out, when you have 50,000, family of 4, 55,000 free of federal income tax. And one final thing on that,
right.
in terms, 6 billion hours a year filling out tax forms, $300 to $500 billion we spend on complying with it. Go back 20 years, imagine all those trillions of dollars going for more products, more services, more medical devices, more cures, how much better off we'd be. Opportunity costs.
Let's have a flat tax, America.
Yay.
EJ and Steve Forbes, thank you so much, gentlemen. Good to see you both. Appreciate it.